why we choose to manage our funds in-house. In the past, we used to outsource most of our funds. But what we found out really is that we had a different investment philosophies compared to all the other fund houses out in the marketplace. What is our investment philosophy? Very simple. Our investment philosophy is that anyone who put with us their hard-earned money must walk away from us after 3 years making some money and not making losses. There's one philosophy that drives the entire team from the day Huang Investment Management was set up. Any one of our big individual corporations, pension funds, institutions that have placed money with us, I can say boldly that they have all walked away making a return from us. That, to me, is the right strategy and right philosophy. Although in terms of how you approach the investments, we cannot control the markets. Markets goes up, markets go down. Markets doesn't go up when I tell them to go up. Each time I tell them to go up, it comes down. Right? Each time I think it goes up, it comes down. Each time I think it goes down, it goes up. But despite all these challenges, we are paid a job to ensure that our clients make money. At the end of the day, if we cannot make money for our clients, we shouldn't be a fund manager. We all ought to be sacked. And that's a bold statement I made for many years. They are here to make money, and there's no doubt about that statement. Should they not learn how to make money, then they shouldn't be in a job. It's as simple as that, as far as I'm concerned. I've been a fund manager for 22 years, and that remains the core belief that I have on fund managers, that they must make money for their client, and not here right hand and there left hand. There's no such thing. And that's why when we partner with the big names like Schroders, Aberdeen, Macquarie, they don't believe in it. What do they believe? They believe in relative return. If index go down, I go down less, I'm okay. If index goes up, I go up less, it's okay. You know, we don't believe in it. And that's why there's such a clash in our approach and their approach. Is there pro and cons to the approach? There are. Of course, the downside to our approach is we hold too much cash, the market goes up, we miss the market completely. Or we raise money at the wrong time. Or we fully deploy at the wrong time. But so far, for the last 12 years, we have shown the market not all the time our timing is right, but even the times that we are wrong, we could catch up very fast. We could redeploy and say, we are wrong, let's put the money to work. I remember 2011 was one clear cut. When the European debt crisis happened in the month of August, September, as we run out, we were very cautious. We cash up 30, 40%, and Gan keep telling me another 10% doesn't make a difference, but we cash up. But we were too late to deploy. By the time we deployed, when we saw the European debt crisis, the tail end risk is over. It was in the month of November, December. By then, the market has already moved. But it doesn't matter. We went back in again, and in 2012, we did not suffer. In 2011 results, we did not suffer much from it. We suffer a bit, but not so much that it will affect it in a big way. But we rode out the downside of 2011 in a nice manner. So my point is, will we get external fund managers to manage our funds? We will, if we can find one that shares our philosophy. Our China Select Fund that we outsource to China AMC is a partner that I believe in. They do not manage funds according to benchmark. They do not buy stocks just because it is the largest stock in the benchmark. They do not buy Samsung just because Samsung is the largest stock in Asian Pacific. They buy things according to their conviction that these are good companies. And that's us. We want to only partner with fund managers. We can find them who buy things with conviction because they can make money on the absolute basis. So for the Chinese space, we are not the best experts. We partner with China AMC. Will we partner with other people in different space? We will. as long as they share the philosophy that we have, we will. Can we manage 30 billion without even partnering anyone? The answer is also yes. Why is it yes? Because no longer invest just in Malaysia. Have we not expanded to the region, to Asia, then we will be constrained on our return if everything has to be invested purely in Malaysia. Today, about 5 billion out of the 20 billion funds that we have is now invested in the Asian region. Going forward, more money will be invested in the Asian region as we continue to grow, and that basically provides us the space to grow. Because just in Malaysia itself, you will be constrained. Any one of my peers who have not developed their skill sets to pass beyond the region, they will be